I'm Mark Davis, and I'm here today with Randall Oliphant, the chairman of the board of New Gold Inc. Randall, how are you today?
I'm well. Nice to be with you, Mark.
It's a pleasure to meet you. Randall, first off, New Gold has been an especially strong performer amongst gold-producing equities in 2010. What do you attribute that to?
Well, we've really had the wind at our back, Mark. I mean, our teams have worked very hard to accomplish, our goals, and in fact, we've exceeded most of them this year. But we feel very fortunate. We've been in a good gold market, a good copper market, a good silver market. Our operational teams have come together. Some of our corporate development efforts have really paid off for us. And we've been able to, establish New Gold as a serious mid-tier producer.
Okay. When I interviewed New Gold President Bob Gallagher back in May, he indicated at the time that New Gold was aiming to produce 340,000 ounces of gold in 2010 at an average cash cost of $450 an ounce. Are you still on target?
Yeah, we are, and we've had some challenges this year, but our teams have risen to meet them all. Our guidance, we're well on track to meet our production guidance. In fact, probably do a bit better than that. In terms of costs, we just completed our lowest cost quarter ever at $435 an ounce, so well below that target number for the year. So we think that the fourth quarter will be just as good, and we should be able to beat our cost target as well.
Excellent. Are you looking to incrementally increase production from your 3 existing gold mines in 2011?
Yeah, probably 2 of the 3 will do better in 2011 than they did in 2010. The other one producing about the same amount. So collectively, yes, they will do better, which sets us up well for 2012, which is when we step up again.
Good, good. Your flagship project would be, I presume, the New Afton Gold Project right here in Canada.
Mm-hmm.
How is that project coming along? When do you envision it coming on stream? And how many additional gold ounces would that add to your overall production profile?
Yeah, well, the project is doing remarkably well. The concern generally with big projects is delays or cost overruns, and the good news on New Afton is there is no news. It's still going to start up in the middle of 2012, which is just about 18 months away. It's still on budget at $600 million. The team is really coming together well, and this will give us another 85,000 ounces of gold a year, plus 75 million pounds of copper. So it has the potential to double the cash flow of our company.
On the subject of copper, how important will be the mining of copper as a byproduct at New Afton in terms of your bottom line?
Well, it'll be huge. 75 million pounds of copper a year at $4 a pound is $300 million of additional revenue just from copper.
Wow. So
that goes a long way to paying the operating costs at the mine. In fact, if you look at it as a gold mine, it'll have negative operating costs. If you were to look at it as a copper mine, it would be about zero cost copper because the gold would pay all the operating costs, and we'd have that much in cash flow. So this is very significant for us.
Okay. Up until earlier this year, New Gold's growth profile was constrained by your need to acquire assets that would generate virtually immediate cash flow. How has that situation changed?
It's changed dramatically. When we did the last merger, which was New Gold and Western Goldfields, we had just enough cash being generated by our 3 mines to build New Afton. Today, we've got more than enough cash in our balance sheet to complete New Afton. And in fact, in the past year, we probably have $200 million more money than we thought we would have from surfacing value from some of our other assets and from our mines generating more cash with higher metal prices.
I see. So with a beefed up treasury, you're saying $200 million that would not at this point be allocated to New Afton?
Right.
So does that put you in a position to make additional acquisitions of, say, projects that are undervalued and would not be commercialized for another year or 2?
That's exactly right, Mark. Before, as you mentioned, our constraint was we had to look at mines that were in production and generated cash because we didn't have any money to build new mines. Today, because we've got an organic growth profile but surplus money, our focus is more shifted to finding development stage assets, ones that we can continue to expand the reserve base, things that will come on further down the road and just build built the growth profile of New Gold.
I see. I understand it's very important in New Gold to become a bona fide mid-tier gold producer. What criteria are you using to define yourself as a mid-tier company? And what advantages does that offer over being one of the increasing number of gold producers with only one or two assets?
Well, we think there's a few advantages. Number one is, we're drawing production from today 3 operations with New Afton starting, it'll be 4, and then El Moro after that 5.
Right.
So if you have a problem at one of them, you've got 3 or 4 other assets that can make up for any sort of problem, and therefore reduces the risk to the company. Also, it enables us to attract a far greater shareholder base, because today our market capitalization is about $3.5 billion. It's one of the biggest, or in the top 100 companies by market cap in Canada. So it enables larger funds to get big liquid positions in the company.
Okay.
The trading volumes are now about 5 million shares a day, so at $9, about $45 million worth of stock trades. So it means an institution can take a significant position in the company without impacting the stock price a lot. And what we've seen historically, and the reason why we're in this space, is that the mid-tier producers tend to generate better returns than the larger producers, because adding another 100,000 ounce mine is a big deal for a New Gold who produces 350,000 ounces of gold a year, whereas it does nothing for a larger company. And there's a lot of those assets around to be had.
Okay. I understand you're targeting around 1 million ounces a year by way of your criteria of being deemed a mid-tier producer, is that correct?
Yes.
Okay, and when do you envision getting to that point?
We're probably about 3 or 4 years away from that. We're now considered by the market sort of in the smaller of the mid-tier producers. But with New Afton coming on stream and then El Moro after that, plus what we can add with our surplus cash balance and with our stock doing well, buying things is a lot easier than it was a year or 2 years ago. We think we're well positioned to be able to become the partner of choice to companies who want to combine with the larger entity.
Okay. Randall, do you think that investors who own gold producing equities are at a better position than if they were to own physical gold?
Well, I think it depends on which equities they own. The ones who have owned the larger companies, year to date, the stock performance of the majors has been less than what gold has done. So that's sort of led a lot of large institutions to say, look, I'll just buy the ETF or the gold itself, because I'm actually getting the direct return from the increase in the gold price when I own gold relative to the seniors. I think today gold's up about 24% this year.
Right.
The seniors are only up about 15 or 18%, so they've underperformed.
Interesting.
But the intermediates are up about 30%.
Okay.
New Gold itself is up 140%.
Okay.
So we see a lot of institutional investors saying, rather than own the majors, I'd rather own the gold itself. But that a lot of the smaller exploration companies, the juniors, and the intermediates are tending to outperform and therefore preferred to owning bullion itself.
Interesting, interesting. Finally, Randall, what's your view on the bull market for bullion? Are we near the top, or do you think gold will continue to trend upwards over the next several years?
I think it's going to continue to go up. All the fundamentals that have brought us to where we are today, whether it's people's concern about currencies, other financial assets, are all still in place. Plus, something that I take great encouragement from is how the fastest growing economies in the world, and some of the largest ones like China and India, have a great propensity to want to own gold. I was in China in March, and we met with the largest bank in the world, the Industrial and Commercial Bank of China, that's now offering gold savings accounts in their bank. And they have 250 million customers. We met with the head of the Shanghai Gold Exchange, who now has 1.6 million people who are licensed to trade gold in China.
Wow.
We went to a jewelry store where out of one outlet they sold $1 billion a year of gold jewelry. So
Amazing.
When you see those changes happening in a place that has about the fastest growing economy in the world, projected soon to be the biggest economy in the world, I think it bodes very well for bullion.
Okay. Are there any other key points or value drivers that we haven't as yet covered?
I think, Mark, you've done a remarkably comprehensive amount of research on our company.
Thank you.
you know, we're very excited about the future. It seems like every month our company is stronger and doing better than it was the month before, and I just look forward to catching up with you again and reporting on what advances we've made since this discussion.
I look forward to it too.
Thank you,
very
Mark.
much for your time, Randy.
Okay, bye-bye.
Bye-bye.